Welcome to Innovating with Scott Amyx. I'm your host, Scott, and today I'm joined by Greg Shepard, who is the CEO and founder of Boss Capital. Welcome.
Thank you. I appreciate it.
So, Greg, you and I were just chatting briefly before this recording about your humble childhood. So I'd love to learn a little bit more about that, and maybe you could share with the audience about your upbringing.
Sure. So my family was a lot of nine foster children, and then one adopted sister of different nationalities. And so my parents really wanted to take care of children. So my mom was a nun, my dad was a priest. They left the church to take care of children, which usually people are like, wait, back up. They left the church. Okay. So, and then they got married, and then we had all these different siblings. And, in that process, we didn't have very much money, because they were both teachers after that. So we lived in tents for a while, for 2 years, actually, while we were trying to figure out what to do for a home, and building a house and stuff. So yeah, I came from a pretty humble beginning.
Well, thank you so much, Greg, for sharing that. Something that I think there's some commonality is that when I was an early teenager, I think like 13 or so, I became a foster child and ward of the court in the state of California. So completely understand and have
I didn't know that. Really?
A large family with lots of other foster kids as well.
Oh, cool.
So very interesting. Now, The other thing that I think you were starting to get into is that there are some other kind of personal aspects that maybe affect your learning or the way you process information. Is that right?
Yeah. So I have dyslexia and autism. And so, so I might stall, as you probably heard when I met you at the trade show, that I have like stalls. I call them stalls. They're like little seizures or tics. And I had some at that show. But I have that, and then dyslexia. So the autism is something that I've managed to master pretty well. So as long as I'm in a situation where it's business and I know exactly how the algorithm that things are supposed to go in, then I'm okay. It's personal situations that I struggle. And then the dyslexia is actually the most difficult, because, people think that dyslexia is, things go backwards, but everything just mixes up all the time. Mm. And the way you digest and consume the information is mixed up also. So that's the biggest challenge when you're in business and writing books and writing articles and stuff like that.
Well, I can attest that when I met you at a VC pitch event, and you were the moderator, I was one of the VC panelists, is that you're able to outperform in many capacity. So you mentioned kind of the social context, and actually you're very outgoing, boisterous, kind of flamboyant, actually. So I'm actually surprised, but at the same time, I think you've been able to hone and to build up your emotional intelligence and ability to go beyond your comfort zone, so to speak.
Yeah, it's kind of like an act. You're acting. You know how you're supposed to be, and then you perform.
Yeah.
So, but personally, I don't know. In business, I can tell what's going to happen, right? This conversation, I can predict what's happening, and I know how to answer. But in a social situation, and somebody asks you, "How are you doing?" and all this sort, and it's off of the traditional track, then that's where I'm kind of like, oh, and I, get into trouble. But thank you for the compliment.
Yep, absolutely. Now, I think the other thing we wanted to focus on is that many times people just kind of naturally gravitate towards your biggest transaction events, which was the acquisition by eBay, Enteprise Marketing Solutions. But, when we talk about a journey, in your case, from an entrepreneur to an investor, that journey was much longer. And of course, there were many, I wouldn't call many successes, but many successes that eventually led to that bigger liquidity event. So can you kind of walk us through how you got started? Again, you're an expert when it comes to online marketing, affiliate. Tell us kind of your first series of home runs that eventually led you to eBay.
So I was building a biotech company, applied environmental biotechnology company, and I sold that company to the manufacturer of the product, and then started getting into the internet right when the internet became the internet. And so initially there was like a gold rush for websites. So you would build websites for people, But then quickly, the first thing that came up is everybody asking, okay, well, I have a website. Now what? How do I get people to my website? And that's when I started learning about online advertising. And at that point, search was an exchange of links. And that's how you would and that became affiliate. And then I moved and evolved with the industry. And I became the first guy to start the first affiliate marketing agency. I built a bunch of websites that were in the affiliate space and travel and, passports and visas and luggage and all kinds of different things. And then sold those different properties. And that's how I funded Affiliate Traction, which was the company that got bought out during the eBay transaction.
So let's just spend just a few minutes there in terms of, how would you characterize kind of that evolution of the internet? Because it is very fascinating. I think we're both old enough that we've seen the beginning of the .com and to where it is now and to where it's eventually going. So how do you think that was such a critical juncture? And then as we look to, especially getting into more of the investments, where is it going? How do you allocate your investments into the future of the internet?
So the first part of the question, I think that the evolution of the internet as a marketing machine, which is the way it started, has conformed to an information machine. And then the information machine has become an entire ecosystem. And out of that ecosystem became several startups. And then you start to see the startups for startups, right? So Divvy and these other companies that create products and services for startups, credit card, bank accounts, software, everything. So this sort of train event. So I see it as like there's a drop of water and then there's all the little wakes that come off of it. And so the ARPANET, which became the internet, was the drop of water when it started to bloom out. And then Google really started to change that space by making data more available, right? So then everything just started to pop, and there's wakes after wakes. And so the next evolution was a whole new drop in the water with new wakes, which is this growth of startups, which I feel spawned out of that change, which just so happened to happen at the same time as the whole world is changing. Energy, transportation, everything is evolving at an extreme pace, and that's because of the shared information now that's available on the internet, which makes it easy to do a startup, right? The ideas are everywhere.
Yeah. So that's really kind of the point that I was trying to get at. And as it pertains to what you're seeing now and the potential of where things are going to go into the fourth industrial revolution, what are the areas that you're investing in?
I invest in software companies, so SaaS prescription revenue companies, but I have a term I call inch wide, mile deep. So I look for opportunities that are an inch wide and a mile deep. So instead of mile wide, inch deep opportunities. So, if you go out into the space, you see a lot of Marcom, AdTech stuff that's out there in the advertising space. So those kind of deals I tend to skip over. I'm looking for things that are so last week I exited from a deal. It was in the transit space. The company sold to Cubic for 48 million, I think 48,750,000. And I worked on this thing for 3 years with the founders, installed BOSS, and brought the company up. And that business sold a way for people that use public transit. So this is buses, trains, ferries, everything like that, to use a credit card more like the card that you use now with a chip. So you don't have to go to a station to recharge or to a kiosk. You just do it from your phone, or you can just pay with Apple Pay when you get on the bus or the train or whatever. And that also gives the transportation system data, so they can tell when they should be deploying things, where they should be going, how big should the train car be, how many buses, how big is the bus, where the stops should be, all this kind of stuff. And so that's inch wide, mile deep. Now, those founders wouldn't have known that if they hadn't been in the industry. So I look for subject matter experts that are deep in an industry, and they find problems that nobody else can find. So when I look at investments, there's opportunity investments and there are problem investments. So there are investments that you make that are taking advantage of an opportunity that's out there, something that isn't a problem but doesn't exist at all. And then there is something where there's an actual problem that you're solving. I like to work on problem investments, things that there's an actual problem that we're solving. And then I look at the second step, which is, people buy products and companies buy other companies to either make money or save money. That there's only those two reasons. So that's sort of like the stack that I use, if you will, in those different quadrants, to kind of look at the market and just to decide what I'm going to look at. And I look at probably, like, last month I looked at 215 deals. This month is a little low. This time I think I'm about 167 deals. And I may invest I do about one every 3 months. So it's, the pipeline is always coming in. Anybody's listening, please send your deal to me. We love looking at them. So I don't know if that answers your question.
Okay. So maybe we can go through a couple of examples of how you apply your criteria in your due diligence, and maybe an example of the kind of startup that you did invest versus the one that you chose to pass, and why.
Okay, sure. So I did one. So I also do cleanups and turnarounds. So for your listeners, a cleanup is where, let's say that it's a house, and a cleanup is where the house is just a complete disaster. You go in, you put carpet in, you paint it, you put a new roof on, do some landscaping, and then you sell it, right? And then the turnaround is where you do that first phase, but then you also grow it into the growth stage or the scale stage, and then you exit out. So it's a longer term play, right? Versus like a carve out, which is where you buy companies from a public company, like what we did with eBay, and then a roll up is where you buy a bunch of companies and put them together. So I do all these different things. So the analogy I'm going to give you, or the example I'm going to give you, is going to be on a cleanup to turnaround. So there's a business in the real estate industry that's a platform SaaS play, and they were totally cash flow insolvent, meaning they were out of money, they didn't have any money, they couldn't make payroll, the business was just about to go under. And so I wired them money, even without a contract, to save the business, and then worked for the last 9 months to turn it around, and now it's doing really good. And so that's an example of one I decided to invest in. The reason why is because investors a lot of times will, you have the option of investing into the horse, the business and the bones of the software, or the jockey, and that's the management team. And when I look at deals, I think most investors, when I talk to them and do interviews, it's always, we bet on the management team. It's all about the management team. It's the management team. It's the management team. And I completely disagree. And the reason why is because if the management team was good and the entrepreneur had done this before, they wouldn't be on the phone with me for money. They would have their own money because they would have been successful before. So what I say, look, I'll help the jockey and I'll make it so they can ride the horse. But what I want to know is the actual software, the business that I'm investing in, the product, is that worthy, right? So after I go through those first stages, that's the first thing I ask for. And I don't usually invest until like Series Seed. So how you have pre-seed, seed, Series Seed, and A. Everybody says this differently, but that's what I call that stage. So it's in between like seed and A round. And that's where I like to get in, because that's usually where you have market and buyer validation on the product, some beta, you have an idea if people like it and if they're going to continue to like it and that it actually works. And so that's one of the criteria. The other one is that it's a problem, not an opportunity play. The other one is that the bones are really good. The management team, that's okay. If they were able to get it that far and they're new entrepreneurs, I get it. I was there too, right? So I'll help them. I'll help them because I've done it for 25 years. So that's kind of like how I look at the scenario. And then I also like to make sure that the business is doing something for the planet and those who inhabit it, animals, humans, everything, right? I really try hard to invest in that sort of thing. I prefer dreamers, minorities, and women if I can, because they're underserved. But, we're a syndicate, so we take advantage of the opportunity if it's there, if things line up.
So let's focus on the last portion, which is around impact investing. So the triple bottom line sense that you're talking about. And I think when we spoke in person in New York as well, that was something that you were interested in. So can you share with us in terms of the investing, but also this altruistic or other dimension of impact that you want to have as far as your investing goes?
Yeah, so I started doing Boss Capital. I was doing Boss myself, the business operating support system that I made, that I guess I created, only for my own businesses, right? And it evolved and evolved, and then when I got to a point where I didn't really need to work anymore, I decided I went into politics for a little bit, and that's a disaster. So, and I couldn't really affect change, which is really I wanted to help. Coming from my background and then getting to where I am, I have to admit there's some level of guilt, right? You're walking around and you see people that were like you, and you feel like I can't just be taking from things. I need to be giving back. And so I tried the political route, and then I decided, okay, well, what I can really do is use Boss to help other businesses be more successful, to help entrepreneurs succeed. And that was a big deal for me. So I started teaching at universities and, to incubators and accelerators, and started really trying to spread the word, because this is what had worked 100% of the time. And then I got offered this book deal, and then it kind of blew up. And then I said, okay, well, and then I started getting all these deals from entrepreneurs. So I started a syndicate, and the concept of the syndicate is to really have some sort of positive impact, because the idea of altruistic capitalism, that's what I coined, is what I do here, is the capitalism uses motivations, intrinsic and mostly extrinsic motivations, to gain wealth or whatever. These are all extrinsic. And then an intrinsic motivation, which is something that makes you feel good. And that intrinsic motivation combined with the extrinsic motivation means you could make something really successful. So if you think to yourself, I'm finding entrepreneurs, I make them successful, they make money, and the money from the top then filters down to these entrepreneurs. And I've seen this happen, and then they spread the wealth to a bunch of other people. And so you have this idea of wealth distribution. At the same time, hopefully the product that you've endorsed makes things better. And then the triple benefit there is that they usually give a ton back to charities. That's what I've seen with these entrepreneurs. So if I help more entrepreneurs succeed, then I'm essentially creating altruistic capitalism. And that's my driving force. That is my personal mission.
I love it. I love it. I think that's the premise, the quintessential premise of what innovation is that it actually increases our standard of living, our utility, call it happiness, let's say, and per capita income. And of course, in that process, we can actually start to not only consume goods and services, but also not just leisure, but also be able to give back. And the multiplier effect, that's actually in some ways actually more effective than, let's say, fiscal or monetary policy, as an example.
Absolutely.
Last question for you.
Each a man to fish.
Out of time. Is tell us about maybe a product or a company startup failure and the lesson learned.
I can tell you I haven't really lost anything. But I can tell you about some investments that I've made or tried to make that didn't go through. So I had one a few months ago. This gal had a really great platform that helped folks that had high turnover, and so restaurants and day laborers and stuff like that fill out paperwork. So they'd fill out this form that kept all of their HR information into one system. And then whenever they signed up for a new job, they would just send them an email. And then those people would get everything that they needed, right? And those people would click on a link and they would get everything they needed, would integrate directly into their HR system. It was a really good idea, and it was helping the real pain that high turnover industries have, with getting people legalization forms and all this sort of thing. She had gained the first pre-seed round from investors that were not sophisticated investors or even accredited investors. I mean, sophisticated is like 5 million and accredited is like 1 million. And so, you have some of the investors were these folks that had come through, they were doctors, lawyers, they were folks that sold a house or something, and they put in a little bit of money, but they didn't understand business. So when we went in to do the Series seed round and really raise like $1 million, she had already raised, I think, 300,000 or 400,000. Trying to work out a deal with these people was very difficult because they didn't understand business. So their lawyers had told them, oh, you need all these preferences, you need this and that. And really the deal started to fall apart because one of the guys who only had $10,000 in the thing wouldn't let go of his preferences. And, that makes it you can't do the deal, right? So I spent probably $30,000 trying to get this thing to that point. And this one guy who hadn't even spent 1/3 of that in the investment, totally killed the whole deal. And so I would say that, like, if you're talking to entrepreneurs, you need to be very choosy about who you take money from. Don't just think, oh, somebody's willing to give me some money and take that, because you're marrying them and they have say in everything that happens, and they can really cause a problem. And that business actually went out of business about 4 months after that because it couldn't get money from anybody. And I could have saved it. So that's a horror story. And if you're an investor, you need to really understand that those people that are in the business and operating the business know how things should be done, and asking the right questions instead of is more important than thinking that you know the direction of the business.
That is a terrific insight. And on that note, I've been joined by Greg Shepard, who is the CEO of Boss Capital. Thanks for joining us today.
Thank you very much.